Welcome to Learn Wealthy, your go-to channel for real estate insights, market charts, and golden opportunity. Let's build wealth together.
How's it going, everyone? Welcome back to your show, Learn Wealthy. I'm your host, James Santiago. So guess what? The newest Consumer Price Index, or CPI report, just dropped. And the big news is, inflation is still around. But don't worry, it's not as terrifying as last year's, when we all had a heart attack just looking at our grocery bills. Although, it's important to understand that last year's inflation did not go away. This year's inflation is just compounding on top of what we had. Let's dive into the details. Let's break it down. Alright, here's the headline. Inflation is down to a year-over-year rate of 2.6%, which compared to last year's 9% feels like a total bargain, right? I mean, who cares if we're still above the Fed's oh-so-magical 2% target? We're not exactly rolling in dough, but at least it's no longer evaporating like it's in a Mission Impossible movie. So what's keeping inflation on the life support? Drum roll, please. It's your rent. Shelter costs are still rising because apparently landlords didn't get the memo that inflation is cooling off. Rent accounts for like 2/3 of the CPI. So even if the price of your avocado toast stays the same, your rent keeps throwing off the numbers. But in a true free market, landlords would be competing for tenants by lowering down rent. But apparently, price controls and excessive government regulations exist is a reality in our world. But landlords will take the blame for this anyway. That's not even considering how much integrity does the BLS have with their shelter inflation calculation. But on the bright side, gas prices have chilled out a bit, and food prices haven't gone berserk. So hey, if you're feeling less rage at the pump or checkout line, that's why. Just don't expect your landlord to get the memo. Now here's the million-dollar question. What does this mean for the Federal Reserve? Well, with this CPI report being the last major data point before their next FOMC meeting, which we will discuss here in Learn Wealthy, rumor has it they might actually lower interest rates. Yes, the Fed, in a rare moment of generosity, might cut rates by 0.25%, or maybe 50 basis points. Don't get too excited though. Cutting rates don't usually mean a booming economy. If you've been watching this channel, you know that the yield curve has uninverted in a bull steepener fashion and unemployment is rising. And add with that, the Fed cutting rates is historically not a good sign. Either way, if you're sitting there hoping for cheaper mortgages or loan rates, this might be your chance. But having cheaper rates does not always mean lending is not tight. However, we will stay tuned for the Fed to decide your financial fate. Just kidding. We will stay aware of economic events because we decide our own fate and position our portfolio accordingly. So that's the latest on inflation. Still here, but not as bad as before. The previous year's inflation did not actually go away, as we are only experiencing a disinflation, which is a slowing down of inflation. And we're not actually on deflation, which means prices are going down. So don't celebrate just yet. As always, if you enjoy this breakdown of how your money's getting less worthless, hit the like button. It really helps me with the YouTube algorithm. And please hit the subscribe for more finance, investing, real estate, and macroeconomics. Tell me in the comments how inflation's still messing with your life, whether it's your rent, your grocery bill, or your never-ending car payments. Thanks for watching, and I'll see you in the next video.